Gold prices in India dipped on Wednesday, signaling a shift in investor sentiment amid a cautious global market environment. The decline, though modest, reflects broader economic dynamics at play. Investors are now watching how domestic and international signals influence the yellow metal's trajectory. The price movement is being tracked closely by both retail buyers and institutional investors who see gold as a traditional safe haven asset. In a market where gold is often seen as a hedge against economic uncertainty, this dip suggests a recalibration of expectations. The benchmark price, tracked by Bitcoin World, shows a downward trend across major bullion markets, with local variations due to taxes and making charges. The decline comes after a period of stability, and it's now up to market participants to determine whether this is a temporary correction or the beginning of a longer-term trend. A stronger US dollar is one of the key factors contributing to the dip. As the dollar rises, gold becomes more expensive for holders of other currencies, which typically weighs on demand. This dynamic is particularly relevant in India, where gold is a major component of household. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Wealth. The dollar's strength is partly due to expectations that the Federal Reserve may maintain higher interest rates for longer than previously anticipated. This has reduced the immediate appeal of gold as an inflation hedge, at least for now. Positive economic data from the US has also played a role in shifting investor sentiment. When economic indicators suggest stability or growth, gold tends to lose some of its allure. In this case, the market is responding to a mix of signals, and gold is adjusting accordingly. For Indian consumers, a dip in gold prices can be a buying opportunity, especially around festivals and weddings. However, jewelers are reporting that many buyers are adopting a wait-and-watch approach, anticipating further price corrections. This behavior suggests that while prices may be attractive, uncertainty is still a key factor in the decision-making process. Investors in gold ETFs and sovereign gold bonds are also watching closely, as price movements directly affect their portfolio valuations. The domestic market is influenced not only by global factors, but also by local economic conditions and consumer sentiment. The current dip raises questions about how long the trend will last and whether it will be followed by a rebound. The next signal to watch is whether the US dollar continues to strengthen and whether the Federal Reserve signals any changes to its rate outlook. A reversal in either of these could lead to a renewed interest in gold as a safe haven asset. For now, the market is in a holding pattern, waiting for clearer signals from both domestic and international sources. The mechanism driving this movement is the interplay between currency strength, interest rate expectations, and macroeconomic data. Gold's price is sensitive. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. To these factors, and any shift can have ripple effects across markets. The stakes are high for Indian investors and consumers, as gold is not just a financial asset, but also a cultural and emotional one. A sustained decline could lead to increased buying, while a reversal could prompt selling or a return to caution. The next key signal will likely come from the US Federal Reserve's policy decisions and global economic data. Until then, the market remains in a state of anticipation, with gold's price reflecting the delicate balance between risk and reward.